If you're not able to pay yourself a nice salary, a nice payroll, and you're existing on whatever's left over or you're paying yourself distributions, we need to talk.
You're listening to the Ground Transportation Podcast with Ken Lucci of Driving Transactions and James Blaine of PAX Training. Learn how you can build a thriving transportation business with real profits, repeat clients, and enterprise value. And now for your hosts, Ken and James.
Well, good afternoon to the Ground Transportation Podcast audience. My name is Ken Lucci from Driving Transactions. We are a financial analysis, profit improvement, and business valuations company. We represent companies for sale. We also help people buy, and we help people improve profit and get their financials in order. I am usually joined at this time for the podcast by James Blaine, but James, unfortunately, is out training a group of motorcoach drivers today. In an undisclosed location. So, James, we miss you. So this is unfortunately for the audience going to be a solo episode, but I think you'll get something out of it. If you're joining us on YouTube, behind me is the word perseverance. And today's episode is going to be a lot about words that start with the letter P. We're going to talk first about proactive planning equals predictable profits. Proactive planning equals predictable profits. We're at the beginning of the year, so it's a perfect time to do business planning. And, in general, we do this with our retained clients all the time. Actually, we only do the planning for retained clients, but I have an outline available for you. If you email me, klucci@drivingyourincome.com, I'm going to send you the business planning outline, and there's really 10 elements to it. So we're going to talk about proactive planning equals predictable profits. Ideally, you want to start this kind of a document at the beginning of the year, January, by the end of January, as long as you've got an outline. But you want to publish it at the very, very latest by, let's say, mid-February. The good news is this is a business planning outline that you should be able to share with your team, right? We're not going to share any secret sauce or, hey, this is what I make, or as an owner, this is what I take out. But we're going to have some goals and objectives that you really should share with your team. Now, the good news about this business planning outline is this is good for a single car operator all the way up to, we do this with companies that are 100 million, 10 million, etc. So let's talk first about the first objective of the business plan. You want to list your major company revenue and sales objectives. That's where my mind always goes. I don't want to make this exhaustive. You can't make this exhaustive if it's going to be achievable. So a company revenue target or revenue objective for 2026 may look something like, you know what? We want to increase top line revenue by 10% a year over last year. So $1 million company wants to get to 1.1 million. A $10 million company wants to get to 11. A $20 million company wants to get to 22, right? The other thing you can do is say, you know what? I want to maintain top line revenue, but I want to grow a segment of my business. We're working with a great operator, good sized $12 million company, and he entered into the motorcoach space with just fantastic results. Last year, we helped him buy his first motorcoach and do an ROI calculator, pricing calculator, and he did so well with it that he just bought a second and third. So he said, you know what, I'm really good with the rest of the revenue, but we need to launch the motorcoach space. So we designed a revenue target around that and the sales objectives around that. So that's objective one, revenue and sales objectives. That's number one. And there's 10 of these. So, another objective might be, you know what, I'm going to strengthen the relationships with my top 20 clients. I'm going to look at what they did last year, and I'm going to try to double down with my largest clients and maybe expose them to another kind of service that I've never talked to them about. Objective number two, your major financial objectives. Now, yes, this involves profit and loss statement. It involves, we take our clients through a budgeting and dynamic forecast process. So what's the difference between a budget and a forecast? This is really what my esteemed colleague, my business partner, the chief financial analyst of Driving Transactions, should answer. but he would tell you that a budget is a detailed financial plan of the future that outlines your goals and expectations, and budgets are more fixed. Budgets are also based on goal setting framework, but it's also your financial data. Whereas a forecast, to do it right, it's a projection based on historical data and analytics. What does that mean? We take our clients through this all the time, retain clients. We look at your revenue per vehicle. You could do this yourself. Look at your revenue per vehicle from last year. We know the industry averages in most major cities around the country, and we set low, medium, and high targets. But let's take a look at, let's say you're a 10-car operator. Look at what each one of those vehicles generated last year, figure out who your workhorses were, and say, wait a minute, if 5 of my SUVs did on average 175,000, but these 3 did 110, let's make a goal of getting those 3 performing. That's the analytical piece. That's the revenue piece. And then what you do is you back that into your financial data. That's a forecast. So major financial objectives include creating a budget with a dynamic forecast. It can also be setting a budget around the major financial metrics of the business. Revenue growth target, direct cost targets. In this day and age, it's really keeping your direct costs in line, but you need to know what those were last year in order to do that. 2 ways of doing that. Number one, we have a course that teaches you how to do that. Driving Financial Success. Go to drivingtransactions.com, look at the course. Or work with your bookkeeper and say, look, we want to look at all of our direct costs as a percentage of total revenue, and we need to keep those in check. And it's going to be tough because, everything is rising. So look at your revenue targets, look at your direct cost, establish what your gross margins have been, and how are you going to increase those? One way to increase margin, obviously, is to increase your pricing on some of the specific vehicle categories that you have that are not necessarily extremely price sensitive. Example, you can go up on your wedding limousines, you can go up on your mini coaches, you can go up a little bit on your motor coaches, etc. Whereas you may say, geez, I don't want to go up on my airports, okay, because we have so much competition there. So to increase your gross margins, there's only 2 ways to do it. Increase your revenue, you increase your pricing, or lower your costs. So you look at that. Another budget target would be manage your G&A expenses. You're going to have to maybe give some people some raises, so you're going to have to figure out what are my overhead expenses that I might be able to cut. And then next is, what are my profit targets? Best thing to do to establish a net profit target is look at what you did last year and shoot for that. Now, the average limousine company that's out there, the average company, and we have the profit equations for pretty much all companies. What I mean by profit equation is based on X amount of revenue, how much you should be spending for direct costs, paying your chauffeurs, paying your fleet expense, insurance, your fleet vehicle costs, etc. How much you should make for margins, how much should your overhead be, what should be, and how much should my profit target be. We have those profit equations for every company size imaginable. But in general, your net profit, if you're not making between an 8 to 12% net operating profit, I'm not talking about paying tax on that now, net profit target should be somewhere between 8 and 12% after you pay yourself as the owner a nice healthy W-2, a nice salary. If you're not able to pay yourself a nice salary, a nice payroll, and you're existing on whatever's left over or you're paying yourself distributions, we need to talk. So that's the budget and a forecast. Your third business planning objective is, what are my marketing and communication objectives for this year? Well, what do I mean by that? Well, let's start by looking at how much you're spending on marketing and for what. And let's calculate a return on that investment. So if you're spending on Google PPC or SEO services or social media, we need to establish how much revenue you need to bring in to break even on that expense. That's a return on that investment. And the marketing objectives may be, what are the 5 things that I can do every single week in my market that cost me practically nothing but my time? Go to the Chamber of Commerce, going to the local GBTA, going to the local NPI, going to other business networking functions, That's a good marketing objective. Let's talk about communication objectives. How about you look in your reservation system and create a list of dormant clients that didn't use you in 25? Maybe go back 2 years. Look in your reservation system, who used you in 23 that didn't use you in 24, 25, and send them some email marketing. I do this with clients all the time. Hey, this is Ken. We haven't talked in a little while. How you doing? Just letting you know we have some new services. Also, hit your top 20 customers, whether those are individual businesses, whether they're private individuals, maybe even affiliates, and let them know all of the things that you can do for them. Don't think that they're sitting on your website figuring out, wow, I didn't know these guys had a jet sprinter. I didn't know these guys had a new sprinter or new mini. You need to tell people that. So that's a communication objective. 4 is your major sales and business development initiatives or objectives. So what's the major sales objective? If you have a revenue target of increasing revenue by 10%, or increasing motorcoach by $250,000, or getting that minivan, that minibus, or that new jet sprinter, getting that producing revenue, the sales objective is how you're going to do it, right? We talk to our clients, the first thing you want to do is look at how your vehicle production was last year. What excess capacity do you have? And that's a good place to start on sales objectives. It may be, I want to increase more charter work. I want to increase more special event work. I want to increase more group and meeting work. Well, you need a sales initiative. We're big on looking back at and harvesting your sales data. We do that for every single retained client and every single profit improvement engagement that we take on. We look at sales data like nobody else. And my business partner pulls down data from every reservation system, slices and dices it. Some of our biggest clients didn't even know, wow, I didn't realize that client was doing much less work. Or wow, I didn't realize that client has never used me out of town. So sales initiative is very important. Why don't you start with something easy? Look at the dormant customers and then look at doing sales outreach to your top 25 clients. And look at those clients and say, if they're a law firm, for example, why don't you find 5 like law firms and make a sales initiative that you're going to reach out to them, you're going to try to meet them, you're going to try to cold call them, you're going to try to prospect. Number 5, service and hospitality improvement goals. I got to tell you, we as an industry, we have to really take a giant step forward on how we treat our customers, because it's not about the brand new Escalade. Because the other day I saw an Uber black car at BWI, which is the Baltimore International Airport. Brand spanking new Escalade. I thought it was my car, my chauffeur car. It was an Uber black car. So it's not about the car anymore. It's about service and hospitality. So what are your business plan objectives to improve service and improve hospitality? And these can be a myriad of things, but let's just talk about quality improvement, defect reduction, improving your on-time performance. We work with every retained client that we have. We pull down their on-time performance from most of the major softwares. We build a report for it, and we basically look at that by customer, by driver, etc. But why don't you start by doing what my friend Douglas Schwartz does on Long Island? And I love Dougie, and I always talk best in class. I talk about Doug. How about going and looking at how you can get more 5-star reviews and solicit reviews from your best clients and ask the question, how are we doing for you? How are ways you think we can improve? Why don't you secret shop your company? Why don't you call the company and see how, or have a friend do it, and see if the service and hospitality critical cues that you want handled or communicated are really being used. One example is have the person call in and make a mock reservation. Are they using the client's name? Are they greeting the client? Are they asking the client if they've ever used you before? Are they thanking the client for calling today, etc.? But figure out your service and hospitality improvements that you want to make. It may be introducing a new service. It may be increasing the amount of service that you do in a specific area. I myself like the on-time performance metrics. Okay, number 6 objective, operational objectives. What kind of system and process improvements do you want to make? I wrote down here because I always think of my co-host James Blaine. I mean, I think of him constantly. Safety. How do you triple down on safety? How do you harvest the data from telematics or harvest the data from your camera systems? How do you triple down on safety and build a case that you are a safer company than your competitors? And how do you demonstrate that to clients in your insurance company? That's an operational objective. It might be as simple as, look, I want to make sure that every one of my phone calls are answered within 2 minutes. I want to improve my dispatch tracking. But you have to answer the question. But the 6th objective of a business plan is operational objectives. The 7th objective involves people and organizational objectives. Okay, so let's talk about that. It could be key hires. I want to add a new dispatcher this year. I want to add a salesperson this year. I want to I want to have my dispatcher, I want to improve his or her communication skills. So it could be hiring, it could be employee development, it could be employee engagement and retention methods, like I want to create a bonus structure for my people. It could be performance management improvements. It could be cultural. It could be, I want to double down on service and hospitality, so I'm going to teach the Ritz-Carlton Gold Standards course. Frankly, I want to improve my chauffeur performance, so I'm going to institute PACs. Okay. I can't think of a better investment than investing in the people who are on the front line of your company. So that's the 7th objective of business planning. So those are the major objectives, but it means nothing unless you create a quarterly focus and quarterly milestones of what are our targets. So if I said, for example, one of my objectives is I want to implement a CRM. I want to learn Zoho. I'm a huge fan of Zoho. By the way, we have a consultant we can refer to, but I'm a huge fan of Zoho. I want to institute a client communication, marketing and communication program, and I want to learn Zoho. Okay, when are you going to do that? Quarter 1. Another thing with Quarter 1, I want to work with driving transactions, and I want to make sure that my budget, or I'm going to work with my bookkeeper, I want to make sure my budget and forecast is done by mid-Quarter 1. No offense, but if you haven't done your budget and forecast in your first quarter, you're way behind the curve. Because usually in our industry, the first quarter is kind of quiet. Okay, so don't do your budget and forecast in the middle of busy season. Do it when you've got equipment hanging around and you really want to work with you people because you get some time for, again, proactive planning equals predictable profits. Quarter 2, what are your priorities? So out of the objectives that you just identified, what do you want to have accomplished by Quarter 1, Quarter 2, Quarter 3, and then finally, what are your priorities by the end of Quarter 4? So the 8th objective is to put timing targets in place, and we like to do everything either monthly or quarterly. You can do 12 targets, one per month, or again, the most important, all of your revenue, sales, and financial targets should be established by Quarter 1 and behind the 8 ball. So number 9 element of a business planning outline. And again, email me, Lucci at drivingyourincome.com. 3 words, no hyphens. Lucci, Lucci at drivingyourincome.com. And I'm going to send you this outline for you to work on with some suggestions for each one. Okay, so number 9 is, what does the success look like? At the end of the year, what does success look like at the end of the year if you've done a really good job executing your plan? So I always yield back to the financials first. What's my total revenue going to be? What is my cost of goods going to be? What's my gross profit going to be? What's my overhead? And what's my NOI? And what's my standard EBITDA? Financials, financial target may be I'm going to reduce my debt. And I got to tell you, I'm a little worried about some of the EIDL loans hanging out there. and people still paying interest only. I mean, at the end of the day, that's a sword of Damocles over your head. It might be another success criteria. Maybe, you know what? I'm starting the year with only 75,000 in the bank. I want to generate a profit of 8 to 12%, and I want to have cash reserves at the end of the year. I want to have cash. I want 200K in the bank. For every $1 million that you're doing in business, if you're not generating 80 to 120,000 in cash after you are paying yourself, not your distributions, but every week you're paying yourself payroll, W-2, et cetera, et cetera. If you don't have 80 or 120 in cash for every million you do, you got to talk to us because you have profit problems. Okay. So what does success look like at the end of the year? And then let's talk about non-negotiable outcomes. So let's face some realities. Even though quarter one is slow, you know, any plan is going to get sidetracked. Some of the elements are going to get sidetracked because other stuff's going to come up, other opportunities, other fires, etc. So what are the non-negotiable outcomes? Okay, I'll give you, for us, for example, you know, we only have a certain number of retained slots, right? Because, you know, it's me, Cole, and a couple of researchers, and I'm getting old and Cole's busy. And so we have only a certain number of retained spots. I want those absolutely filled. I want them filled by, at the latest, February 15th. I want our Zoho CRM project done. I want every single prospect out there and all of my nifty communication stuff. I want that in Zoho. I want that all done by the end of quarter two, right? I have objectives and outcomes as far as the surveys that we do with Chauffeur Driven. I want to have our retained slots filled. We have valuation slots to fill, and those are my non-negotiable outcomes. Do I want to do another course? Yeah. But you know what? If I don't get to it, but I get to my top 2 or 3 non-negotiables, I'm good. Okay, I'm not a perfectionist anymore. What are the metrics we're going to use to evaluate success? Guys and gals, if you're not using your year-end profit and loss statement from 2025, and you're not doing a budget for 2026, and those are not your base metrics, that's not a business plan. That's what you need. And again, if you need help with that, feel free to reach out. We've got a course that talks about that. We have a module on budgeting, but it also tells you, the course will also put your financials where they need to be. Best investment out there. We've sold 275 of those courses. I think I gave money back to, and by the way, it comes with a money back guarantee. I gave money back to one operator that was a one-car operator. I'm like, dude, this is too big for you. So I let him keep the course, but I gave him his money back. Okay, so that's the business planning aspect. Those are the 10 things. So let's recap what those are. Number one, we're going to start with the number one objective for 2026 business plan is, what are your revenue and sales objectives? Number two, what are your major financial objectives? So you need your P&L for that. You need to know, what are your major objectives? How much revenue am I going to bring in? How much net profit am I going to bring in? What are my monthly seasonality going to look like? What are your major financial objectives? And again, budget being more of a fixed thing, definitely looking at what your cost structure is and what your trends are, but your forecast should be dynamic. Every single month you should be looking at your forecast, and if you achieve it or exceed it, good for you. But you may have to make adjustments in the forecast. We work with people, and by the middle of the year, if we see that certain vehicles are not moving, you got to say to yourself, either I'm going to get them moving or I'm going to sell them. This is an asset utilization business. So that's number 2, is major financial objectives. Number 3 objective is marketing and customer communication. Number 4 is major sales initiatives. Number 5 is service and hospitality improvements. Number 6 is operational objectives, goals, systems, processes. Number 7, am I going to make people and organizational goals and objectives? Maybe I want to give my people more money. Maybe I want to figure out who I'm going to give bonuses to. And number 8, again, what are my quarterly focused targets out of all of those things I mentioned before? Number 9, how am I going to measure success? Is it going to be based on revenue production per vehicle? Is it going to be increasing revenue per trip per vehicle, etc.? That you can really only measure your success with 2 sets of data. One is your P&L. The second is your balance sheet. That more deals with cash and debt. And then your entire revenue suite, your entire KPIs from your reservation system. So you have to figure out how you're going to measure and what you're going to track. And then give yourself a break. Just give yourself the non-negotiables. If you have those 7, out of those 7 objectives, you might have too many objectives in the middle there. Just give yourself a half a dozen that are non-negotiable, okay? And you say to your team, you keep the non-negotiables to yourself, right? But you tell your team, here's what we're going to do. Here's who's going to be the assignment on this. Here's how we're going to track this. This is what we're going to do every single month, and we're going to stick on this, and we're going to stay focused. And then, again, the metrics. What are you going to use and track every single month? Our retained clients meet with us once a month. We say it's a 60-minute meeting, but they always go 90 minutes. And what we do is we look at their entire financial package that includes how they're doing profit and loss-wise, how are they doing against the budget compared to last year, budget versus actual. Do we have to adjust the forecast? What does the forecast now look like because we've gone another month? We look at all of the revenue KPIs that come out of the reservation system. Can you do it yourself? Yeah. I mean, we only have so many retained spots, but I would encourage you to get our course, because our course talks all about that. Our course also gives you a number of hours to work with us on, to answer questions for you. But again, the business planning piece is something that if you email me, I'll send you an outline. So something else that's near and dear to my heart besides proactive planning equaling predictable profits is something that I learned way back in the day, a SWOT analysis, SWOT. SWOT is your strengths, your weaknesses, your opportunities, and your threats. It's another business planning tool. And I don't care if it's just you. Just get in a room and say, what are we good at? What do we do well? What do our customers say we do well? What is our unique selling proposition? What are we great at? What are we weak on? What do we have to improve? I worked with an operator the other day who says, Ken, you seem to have the gift of gab, but I'm really an introvert. So I worked with this person on a 30-second pitch, a 30-second introductory pitch when he meets new people to say what he does. Oh, I'm in the limo business. No, you're not. You are a passenger transportation logistics expert. You're in the chauffeur private transportation industry for sure. And we worked on that 30-second pitch for when he meets new people. And then we worked on what I call an elevator pitch. So when you're trapped, God forbid somebody's trapped in an elevator with me for 3 to 5 minutes. Wow. God, that poor person. What's your 3-minute cocktail party pitch that tells people what you do, but it also answers the question, what's in it for the person I'm talking to? So it may be you meet somebody at your local HOA, you meet somebody at the Chamber of Commerce, and you say, you know what, how many vacations do you take a year? Oh, I always take the family to Disney World. Well, we do a great job with airport transfers. We put everybody in an SUV. We take care of luggage, etc. So all I'm saying there is be honest with yourself about what your weaknesses are. You may have weakness as far as personnel or staffing. So you know what? We're really good first and second shift, but a third shift is really, really weak. We can't give up prices, etc. Okay. Well, figure out what your top 3 alternatives are to deal with that weakness. The O in SWOT is opportunities. Do you have competitors that have any weaknesses that I hate to say that you could benefit from? Do you have target markets that you want to grow? I mean, do you have private schools in your area that you know what, we get a great opportunity. So-and-so went out of business or a new private school opened up, etc., etc. What are the opportunities in the space? You know what, we don't do any national work, but I have an opportunity to grow an affiliate network. Let's start there. Let's start with the top 20 cities, the busiest airports. And then what are the threats? What are the threats to my business? And it may be, they may dovetail from your weaknesses. Your weakness might be, I don't have enough cash. Okay, well, how about you creating a relationship with a local bank? Because it is a threat. It is a threat. If you run out of cash or you have an unforeseen expense and you don't have the dollars, that's a threat. So weaknesses and threats kind of sometimes go together. But is a new competitor potentially expanding their business Is our target market shrinking or shifting? So what are the threats? Now, some people would say that our airport service is threatened by Uber and Lyft. I gotta push back on our airport service being our market share automatically shrinking. I think this industry delivers a fantastic product. When people get in and out of our vehicles, they're not worrying about the background of the driver. They're not worrying about the safety of the vehicle or it's insured. They can't really, some of the TNC stuff that's out there, you can't really say that. So we deliver a great product and a service. I think we do a terrible job at proactively marketing our products and services. Most of my customers, we try to shift them from reactive to proactive, certainly on the financial basis. But one of the threats is you're not expanding your marketing and sales. You're not expanding your own reach in your market because there may be somebody that's going to do that and affect you. Could there be an industry or economic trends that could weaken us or hurt us? All I can tell you is you control what you can control, and the way you mitigate against threats from somebody who was in the security industry for a long time is you either fortify yourself physically or you get in better shape. And as far as your business threats are concerned, one of the best things you do is make sure you got enough cash. Make sure that you're in optimum financial condition so that if anything does happen from an economic trends perspective or any chaos, that you're prepared for it. Prepare yourself as best as you can. And I always focus on a SWOT analysis as if you look at it as a seesaw and your strengths, they wouldn't teach this in business school, but if you look at your strengths and opportunities on one end of the seesaw and then your weaknesses and threats on the other, you want your strengths and your opportunities to be the heaviest side. And your weaknesses and threats, you want to have a plan to mitigate those. So you want the scales to be balanced on strengths, much more strengths and opportunities than weaknesses and threats. So proactive planning means you have to sit and you have to really think about where you are today versus where you want to be. And the second thing is, the reason why I brought up the SWOT analysis is you got to be honest with yourself. If you're the biggest weakness in your company because you won't let go of certain things as the owner, and I see this all the time, or you won't embrace new things, you got to be honest with yourself. Now, in any case, in either scenario here for business planning or SWOT analysis, you have the opportunity to reach out to us and you get that 30-minute introductory Zoom that costs you nothing. And we can talk about either subject. Kind of tough to do both in 30 minutes. But I would challenge you. You can go online and you can find your own business planning outline, or you can email us and I'll send it to you. And you certainly can go online and get a SWOT analysis template. But you want to make sure that it's close enough to our industry where you're addressing the specifics. It shouldn't be general. So now is the time to do that. It is the first month in a new year. So to be effective, all of your planning should really be done and finished and set to paper by the middle of February. At the very least, the end of February. It's not that it's not going to be, changing and moving. It's dynamic. But you should at least have your major goals and objectives of your business plan outlined. And again, if you are at all uneasy about what your profits should be and what your financial objectives should be, feel free to reach out to us. Visit drivingtransactions.com and book 30 minutes. It doesn't cost you anything for an introductory session, or just shoot me an email and we can answer some questions. My partner in crime, James Blaine, he is the guy to talk to about improving your service and improving your hospitality elements. And he's as accessible as I am, if not more. I miss him terribly. So again, my name is Ken Lucci. This has been the Ground Transportation Podcast. We will be back next week. Hopefully James Blaine will be back with me as a co-host. So do me a favor, make sure that you subscribe. Go to groundtransportationpodcast.com and you get more further information. Make sure you subscribe on YouTube, as well as subscribe on Spotify or Apple or wherever you're listening to me, because we have a ton of listeners, but we're light on subscribers. Everybody's listening, but they're not hitting the subscribe button. So anyway, I've enjoyed this podcast with you, and go out there and remember, proactive planning equals predictable profits. Thanks, and have a great day.
Thank you for listening to the Ground Transportation Podcast. If you enjoyed this episode, please remember to subscribe to the show on Apple, Spotify, YouTube, or wherever you get your podcasts. For more information about PAX Training and to contact James, go to paxtraining.com. And for more information about driving transactions and to contact Ken, go to drivingtransactions.com. We'll see you next time on the Ground Transportation Podcast.